All right. So have you ever been like totally stressed out because you realize you forgot to pay a bill?
Oh, yeah.
Like it happens to everyone, right? But today we're going to like really get into it. We're going to
Yeah.
do a deep dive into how late payments can really like mess with your credit score.
Yeah, for sure.
So we were checking out this episode of Money Talks with Alex and Mia.
Oh, yeah. I love that show.
They break down this whole system so well.
Yeah, they do a great job explaining it.
So if you're like curious about how bad a late payment can really be,
Mhm.
or maybe you just want to know like how this whole system works,
Yeah, totally.
you're in the right place. We're going to uncover all the like secrets of late payments and your credit.
It's going to be good.
So get ready for some serious aha moments.
Yeah, there's a lot to unpack here.
For sure.
There are so many like misconceptions about late payments.
Right.
And the impact of just one late payment can be way bigger than people realize.
Totally. I think people get so caught up in like the late fees.
Right.
They don't realize there are all these long-term consequences for like your creditworthiness.
Exactly. And those can be way more costly in the long run.
Definitely. And like even just that feeling of panic when you realize you're late.
The worst.
It's the worst. But Alex and Mia brought up this good point.
Oh, yeah.
Like just how late is too late?
Right. Like, is there some kind of threshold?
Yeah, because like maybe you're only a couple days late. Does that like automatically ruin everything?
That's a good question.
Well, they talked about this thing called a grace period,
Oh, yeah, that's important.
which is kind of like a safety net, you know?
Yeah, totally.
Most lenders will give you about 15 days after the due date.
Okay, so you have a little time.
Yeah, you have a little breathing room.
That's good to know.
It's good to know that they won't like immediately report it to the credit bureaus.
Right, because that's when the real trouble starts.
So we've got like a little buffer zone,
Mm-hmm.
but I'm guessing there's a point where that grace period runs out
Oh, yeah,
and
definitely.
things start to get real.
For sure.
So like when does that happen?
The magic number is 30 days.
3 days. Okay.
Once you hit that 30-day mark, it's officially a late payment.
Oof.
And it gets reported to those credit bureaus.
And those credit bureaus are like the big scary ones, right?
Yeah, they're the ones who keep track of all your financial stuff.
So that one late payment basically gets like etched into your permanent record.
Pretty much it stays on your credit report for a long time.
Oh no.
7 years to be exact.
7 years? Are you serious?
Yeah, it's a long time.
Wow. I had no idea it was that long.
Yeah, so that one late payment can really follow you around.
So basically one little slip up
Mm-hmm.
and you're paying for it for 7 years.
Pretty much. That's why it's so important to be on top of your payments.
Okay, so let's say it gets even worse. Like what happens if you're late for like 60 or 90 days?
Okay, yeah, that's not good.
So like are we talking major damage at that point?
Definitely think of it like this every time you're late.
Okay.
You're adding another strike against you in the eyes of lenders.
Okay, so it's like baseball.
Kinda.
3 strikes, you're out.
Yeah, basically 60 days late is way worse than 30 days. And 90 days is even worse.
So it's like this downward spiral,
You're creating this pattern of unreliability.
which lenders obviously don't like.
Exactly. It's a huge red flag for anyone who's thinking about lending you money.
Okay, so the longer you're late, the more damage it does.
Oh, well,
We all
yeah.
know that can lead to higher interest rates,
For sure.
trouble getting loans,
Mm-hmm.
the whole 9 yards.
Exactly. It
Yeah.
can make your financial life way more difficult.
Okay, but let's be honest here. The real question on everyone's mind is,
Okay, let's hear it.
how much can one late payment actually hurt your credit score?
Ah, yes, the million-dollar question.
Like, give it to me straight. How bad is it really?
Well, Alex and Mia shared a statistic that totally blew my mind.
Okay, I'm ready.
For people with excellent credit scores, like 750 or above,
Okay, those are the people who've always done everything right.
it's exactly just one 30-day late payment could drop their score by 90 to 110 points.
Wait, 90 points?
Yeah, it's crazy.
That seems insane for just one slip up.
I know. It's a lot.
I always thought one late payment wouldn't be a huge deal,
Yeah, a lot of people think that.
especially if you have a good history of paying on time.
Right, you'd think they'd cut you some slack.
Exactly, like you've proven yourself to be responsible.
Right, but that's not always how it works.
So what's the deal with that?
Well, what's interesting is that for people with really high credit scores,
Okay.
even a small drop can have a huge impact.
So it's like they're extra sensitive to any mistakes.
Exactly. It's like lenders are looking at those perfect credit reports with a magnifying glass.
Wow, so it almost feels like you're being punished for having good credit in the first place.
Yeah, it's kind of ironic, isn't it?
So what about people who don't have like perfect scores?
Okay, good question.
If they have a late payment, does it still like totally tank their score?
Well, the impact might not be as dramatic in terms of the number of points lost, but it's still definitely negative.
So it's like damage is done no matter what your starting point is.
Right, and here's something super important to remember.
Okay, what's that?
Lenders aren't just looking at individual late payments in isolation.
Oh, so it's not just about that one mistake.
Exactly. They're looking for patterns.
Oh, so like if you have a couple late payments here and there,
Mm-hmm.
it starts to paint a picture.
Yeah, it shows them that maybe you're not so reliable after all.
So even if it's not a huge point drop each time,
Right.
those little slip-ups can add up.
Exactly, and that's why it's so crucial to understand the bigger picture,
Okay.
like how credit scores actually work and why those late payments, even the seemingly small ones,
Mm-hmm.
can really add up to create a not-so-great financial portrait.
Okay, so late payments, bad.
Bad.
Got it. But I think we need to take a step back
Okay.
and like really understand what a credit score even is.
Yeah, let's break it down.
Okay, so late payments bad, got it. But I think we need to take a step back and like really understand what a credit score even is.
Yeah, let's break it down.
Because it feels like this like mysterious number that controls our lives.
It kind of does.
But we don't really understand it. Like, how does it even work? Did Alex and Mia get into that at all?
They did. It's not magic, though. It can feel that way.
Yeah.
Basically, your credit score is a 3-digit number.
Okay.
That sums up your entire, financial history.
Your whole life in 3 digits.
Yeah, pretty much.
Wow.
But specifically, it shows how good you are at borrowing and repaying money.
So it's like a measure of how responsible you are with money.
Exactly. And lenders use it to gauge how risky it is to lend to you.
Okay, so it's like a financial resume of sorts.
Yeah, that's a good way to put it.
But how did they even come up with this single number?
Right.
What actually goes into calculating a credit score?
So Alex and Mia broke it down like this. Imagine your credit score as a pie chart.
Okay, I like pie.
Each slice of the pie represents a different factor that lenders consider.
Okay, so it's like a recipe with different ingredients.
Exactly.
Okay, what's the biggest slice?
The biggest slice is your payment history. It's about 35% of the pie.
Makes sense. Like, are you paying your bills on time?
Yep, that's what we've been talking about this whole time. Those late payments.
Right.
They really take a bite out of that slice.
So even one late payment can shrink that slice down.
Exactly.
Yeah.
It shows lenders that you might not be so reliable.
Okay, what about the next biggest slice?
So the next one is about 30% of the pie, and it's what you owe.
Okay, so like how much debt you have.
It's not just the total amount, it's how much of your available credit you're using.
Okay, so like if I max out all my credit cards, that's bad, even if I pay them off on time.
Yeah, lenders get nervous when you're using a large percentage of your available credit.
So it's like they think you're living on the edge.
Exactly. They don't like to see that.
It's like being house poor, but with credit cards.
Yeah, kind of. Alex actually shared a story about his friend
Oh, no.
who always paid their bills on time.
Okay, so they were doing good there.
But they had a really high credit utilization ratio.
Like they were maxing out their cards.
Yeah, and it ended up hurting their chances of getting a mortgage.
Ouch. That's a bummer.
Yeah, it's a good reminder to keep those balances low.
Okay, so payment history and amounts owed.
Those are the big ones.
What about the other slices of the credit score pie?
All right, so the next slice is about 15%,
Okay.
and it represents the length of your credit history.
So like how long you've been using credit responsibly.
Basically. The longer you've been managing credit well, the better.
So it's like you're gaining experience points in a financial video game.
That's a good analogy. The more experience you have, the higher your score.
So does that mean like young people are automatically at a disadvantage?
It can be tougher for them to establish a long history.
Right, because they haven't had as much time.
Exactly. But it's definitely not impossible.
Okay, good.
Alex and Mia actually had some great tips for young adults
Oh, yeah.
on how to start building credit early.
Like what?
Things like becoming an authorized user on a parent's credit card.
Oh, yeah, that's a good one.
Or getting a secured credit card.
Okay.
The key is to start building that positive history as soon as possible.
Got it. So you don't have to wait till you're like 30 to start thinking about credit.
Nope. The earlier, the better.
Okay, so we've covered the big slices of the pie. What about those smaller ones?
All right, there are 2 more slices,
Okay, hit me.
each worth about 10%.
Okay. Still important.
Definitely one is new credit, which refers to how often you apply for new credit cards or loans.
Okay, so like if I'm constantly applying for new cards.
Yeah, that can actually lower your score.
Really?
Makes you look like you're desperate for cash.
Like you're not managing your money well.
Exactly. Lenders don't like to see that.
So don't go on a credit card application spree.
Nope. Stick to what you need.
Got it. Okay. What's the last slice?
The final piece is credit mix, which means having different types of credit,
Okay.
like credit cards, installment loans, maybe even a mortgage.
So it's not just about having one type of credit.
Nope. Having a mix shows lenders that you can handle different types of debt responsibly.
So it's kind of like diversifying your financial portfolio,
That's a great way to put it.
but with credit instead of stocks.
Exactly. It all goes back to showing lenders that you're a well-rounded, responsible borrower.
Okay, so to recap payment, history, amounts owed, length of history, new credit and credit mix.
You got it.
All these ingredients get thrown into a giant financial blender
Sounds delicious.
to create that magic number, our credit score.
Ta-da.
But what do these numbers actually mean?
Right.
Like what's considered good, bad, and everything in between?
Good question. Alex and Mia said a score of 700 or above is generally considered good.
Okay, so that's the goal.
Yeah. Anything below 630 is considered poor.
So we want to stay far away from that zone.
Definitely. And in between is fair or average.
Okay, so there's a whole spectrum.
Right. But it's important to remember that different lenders have different standards.
So what one lender might consider good,
Right.
another lender might be like, no way.
Exactly.
It depends on their own risk tolerance and lending criteria.
So it's not just about hitting a certain number.
Yep. It's about understanding what that number means in different contexts.
Okay, that makes sense. Okay, I think I'm finally starting to get this whole credit score thing.
Yeah, it's a lot to take in.
But let's be real, why should our listener even care?
That's the important question, right?
Yeah, like what's the real world impact of this number?
Well, think of your credit score as a key.
Okay.
That unlocks financial opportunities.
Interesting.
A good score opens doors to lower interest rates on loans.
Okay, that's good.
Better credit card perks? Even lower insurance premiums in some cases.
So it can actually save you money.
Absolutely. It can literally save you thousands of dollars over time.
So it's not just about bragging rights.
No?
It's about real, tangible benefits.
Exactly. It affects your everyday life.
Okay, I'm seeing that.
And on the flip side, a low credit score can make life much more expensive.
And stressful. Oh, yeah. Definitely more stressful. You might get denied for loans or stuck with sky-high interest rates.
Which makes it harder to get ahead.
Exactly. It's like you're constantly playing catch up.
Oh, this is all making sense. Now, did Alex and Mia give any specific examples
We did.
of how a good credit score can pay off in real life?
Yeah, they talked about this couple who was able to get a much lower interest rate on their mortgage.
Because they had good credit.
Exactly, which saved them a ton of money over the life of the loan.
Wow, that's huge.
Right. And they were also able to qualify for a travel rewards credit card
Oh, nice.
with amazing perks just because of their solid credit history.
So it's like having good credit gives you a leg up in all these different areas.
Absolutely. It opens doors that might be closed to people with lower scores.
All right, so we've covered the good and the bad.
Mhm.
What's the main takeaway here?
I think the biggest takeaway is that understanding your credit score is empowering.
Knowledge is power.
Exactly. The more you know, the better equipped you are to make smart financial decisions.
And build a strong credit foundation.
For sure. It's all about taking control.
Not letting this mysterious number control you.
Right, you're in the driver's seat.
But what if someone's listening and thinking, I've messed up in the past?
Oh yeah, that happens.
Is there any hope for me?
Of course there is. It's never too late to turn things around.
Okay, that's good to hear.
Alex and Mia really emphasize that credit scores aren't set in stone.
So you can improve.
Absolutely. By consistently paying on time, keeping your credit utilization low,
Okay.
and building that positive credit history, you can absolutely improve your score over time.
So it's a marathon, not a sprint?
Exactly.
But where do you even start?
Right. That's the question.
Did Alex and Mia offer any specific steps for getting back on track?
They did one tactic they mentioned for dealing with past late payments is the goodwill letter.
The what?
The goodwill letter. It's basically a letter you write to the lender
Okay.
explaining the circumstances of the late payment.
So why you were late.
Exactly. And you politely ask them to remove it from your credit report.
So it's like an apology letter?
Kind of, but for your credit score.
Interesting.
It's not guaranteed to work,
Okay.
but it's definitely worth a shot, especially if you have a good history with the lender.
And it was just a one-time slip-up.
Right. They might be willing to cut you some slack.
Okay. I'm going to keep that in mind. Any other tips for avoiding those late payments in the first place?
Well, Alex and me are big fans of automation.
Like robots paying your bills.
Haha, not quite. But setting up auto pay for your bills.
Okay, so you don't even have to think about it.
Exactly. Using calendar reminders, budgeting apps.
So many tools out there.
Anything that takes the human error factor out of the equation.
So it's all about building those good habits and systems.
And being proactive.
But I think the most important takeaway from all of this
Yeah.
is that knowledge is power. Understanding how this whole credit system works is the first step to taking control of your financial future.
I couldn't agree more. And remember, you don't have to navigate this alone.
Oh, yeah. Good point.
There are tons of resources out there to help you.
Like what?
Credit counseling services, online tools, even podcasts like the one we're discussing right now.
It's true. There's so much information out there.
And we'd love to hear from you too.
Oh, yeah.
What are some of your tried and true tips for managing payments and building good credit?
Share your experiences in the comments below.
Yeah, let's learn from each other.
And build a community of financially savvy listeners.
That's what it's all about.
So that's it for this deep dive to the world of late payments and credit scores.
Hope you enjoyed it.
We hope you learned a thing or two and feel empowered to take control of your credit journey.
It's your journey.
Until next time, stay curious and keep learning.
If this podcast helped you, don't forget to like, comment, and subscribe. Your support helps us keep making these videos. Thanks for watching.